In Investing 101 today, we are talking to Kathy Rozier. She's a financial advisor here to talk about beginner investing. And I think these are wise tips for anybody. So thanks for coming on this show.
Glad to be here.
Number one, you say you have to ask yourself, why are you investing? Why is that important?
That's the way you start with any time you're going to put money to work. You need to say, what are my goals with this money? What's the risk I'm willing to accept? And what am I trying to achieve at the end?
The achieving is important. So what should the goals be to maybe have a certain amount by the time you retire?
Yeah, and I think people need to take a step back and say, what's my short-term goals? What's my intermediate-term goals? And what's my long-term goals? That'll help drive where you should be putting your money. Obviously, when you think about saving for retirement, you've got 30, 40 years for a lot of people, and you can be focused in taking a lot of risk. If you're saving money for that first house, you need to be more conservative.
So have a game plan.
Put that game plan together, and that'll help you make sure you run through the questions to ask and get you in the right place.
How should people look at the ups and downs of the stock market? Because it's going to happen.
Yes, and last year we had a very, very low volatility year, and I think people thought that that was normal, and it's not normal. We started out this year with a lot of volatility, and we're anticipating more volatility. If you're investing in stocks, you need to know that you're going to have volatility and not to panic. Since 1980, the market has averaged 12%, but the inner high and low in the year averages down 8%. So it's normal to have that. And every few years you have a big sell-off in the market. You have to anticipate that. If you're not comfortable with it, then you don't want to be there.
So think decades, not days.
Exactly.
Another issue that comes up is people try to follow those hot trends or hot headlines. For a while, everybody was talking about the FANG stocks. People were talking about building stocks. What do you think about that?
So keep in mind, this is all individual. So just because your friend is doing something, that doesn't mean that's the right investment for you. I think about Bitcoin to add to that list that people kind of piled onto that. So you just have to go back to your own personal goals and objectives and not catch on to what everybody else is doing.
Which is following the herd.
Exactly. So one of the other things I think is interesting, if you look calendar by calendar year, last year's best performer necessarily isn't going to be the next year's best performer. And people get caught in feeling comfortable. Sometimes you need to invest when you're uncomfortable in a marketplace.
Last question to you. For somebody who is investing for the first time, is it better to just take a look at the market, decide what you like, and maybe those are the stocks you want to get into, or maybe take a look at an S&P 500 fund so that you're just covered by the broader market?
I think that is a good place to start. I think it's about diversification long term, and when we're talking about long-term investing, you need to spread that out, but having like a broadly diversified index fund or a managed fund is a really good place to start instead of buying one or two stocks.
Well, thank you, and we hope to have you back on the show.
Absolutely. Thank you, Angela.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.